Hello and welcome to Euro in Daily Trade Ideas and Analysis. We are entering a new week, and before we go into the daily frames and smaller time frames, let's just take a look at the higher time frames and see what's happening in the market and what we can really expect in the higher time frames. So here I have the Euro Yen monthly chart over here, and here we have some really important moments and crucial junctions that we could be encountering in the near future. So, just to sum up the kind of movement that's happened so far, we had a big fall, and then the market has formed kind of an uh, wedge pattern over here. It's a bullish wedge that it has formed, and now we see that the market has almost reached the target of the wedge pattern on the bullish side. So how we take the target of a wedge pattern is calculate the height of the highest point to the first low that the market has created within the pattern and replicate it from the point where the breakout has happened. And I've done that over here, and you can see that the target for this is at around 135.75 area, and the market is just about 100 pips below the target right now. So, and another important thing over here is this area, this resistance, that the natural resistance the market has displayed in the past. After the big fall, the market retraced up, and it has formed a serious resistance over here, and then the market has bounced back from that point. Now the market has reached the same area again, and I'm not saying that the market should fall back from here, because what can really happen over here is something that we got to wait and see. But what we can really expect over here is some resistance for a minimum retracement to happen. We have a lot of reasons for the retracement to begin after this target. First of all, it is the target of the wedge pattern, and it's a natural resistance area. So combining these things, we should expect some retracement to follow. But I also want to mention over here and bring to your notice that whenever there is an important resistance over here at any level, the market does not really hit it and then just bounce back and start moving back, at one go. My prediction would be that my market should test and retest this area at least 2 or 3 months in a row. So I would expect the market to hit it and move and maybe come back and test and move back and do that for the next couple of months or 3 months before it either breaks at above and continues to go upwards, or comes back down and forms some kind of a maybe an ABCD pattern or something. We don't know that yet. It's too early to really predict or judge or something like that. But what we do know right now is that the market is at some close targets right now, and also there is an important resistance that's coming up. But let's just see where the fib resistances are from this point in mind. Okay, so the market has broken the 50% resistance, and the 6618 resistance is at around 140.49, and I think that's a little bit too extended, because it's also higher than this the highs that was created in the previous resistance. That's around 138 area. So I don't think that the market should really go ahead to 618 resistance, but don't be surprised if it really does. So currently, since we still have about 100 pips to reach the target of the bullish wedge, I think we should not look at any short moves in any short time, in the short period. But anyways, with this in mind, let's just look at the Euro Yen weekly chart. On the weekly chart, I don't have anything different from the previous week that I had shown. Again, I was expecting a bearish wedge to really work out over here, though it's not the best looking wedge pattern, but it could have still worked. But with this move with the last week's move above the previous highs, it has kind of negated the bearish wedge move as such. But What is still a possibility is that the market could still test the lower border of the wedge pattern and continue to go down to this target. It is a possibility. I would not deny it. I would not disapprove it completely. But the chances that it would do that is a little low, and I would consider this pattern to be a fail pattern already. But maybe we should just wait for the next week to finish and see where it is ending up before really coming into some kind of conclusion. But apart from that, we do not have anything important over here. But you could also see that if it's just a possibility that I want to show over here, that this can be treated as a rectangle pattern. And we know that with the rectangle patterns, especially with the euro yen, the rectangle patterns really work well, and most often than not, they make sure that they reach their final targets. So in this case, if you have to see the target of the rectangle pattern, since the breakout has already happened to the higher side, let's just try to calculate it. Yeah, so if you consider this as the height of the rectangle, I'm sorry, yeah, if you consider this as the height of the rectangle, and if you draw it to the upside, then yes, it is exactly merging with the lower border of the wedge pattern. So this can still be a possibility, and calculating the target of it is around 136.86, which uh, which is a possibility, though it is a little bit extended from the target of the wedge pattern on the monthly time frame. But since we're talking about the monthly time frame, 100 pips or even about 200 pips above the target, or close to the target, is not a big deviation on such a large time frame. So this can happen, and we could really expect this to work. Apart from that, the stochastic is at a buy, and the MACD is bearish currently, but looks like it is converging into the signal, and yeah, probably it could turn bullish sometime soon. So the market is at a critical junction right now when it comes to the higher time frames, and it calls for cautiousness. So let's just have a look at the daily time frame now to see how we can trade this, and what should be our plan into the coming week. Before we go into the technicals, I just want to bring you the notice of the fundamentals that's happening with the market right now, which is the key, and which is also very important for us right now. What we're talking about is the German elections that's just happened today, and how this can really change the market scenario is something that I just want to talk about in a very brief manner. Now we know that there are two important political parties that are contesting for the elections, or the outcome is based on these two political parties. One is the CDU, and the other one is the Social Democrats. Now, how can either of them winning change the scenario when it comes to the euro, when it comes to euro currency altogether? Now, CDU, as we know, is the party, or is the political party that has an inclination towards continuing the bailouts towards the weaker economies in the European Union. And if they come back to power, if Angela Merkel comes back to power, you can expect this bailouts to continue. Though we could expect some more stringent policies towards how a country should be bailed out, or in the union. But on the whole, it would mean that the bailout policies that have been laid out so far will be continued, and that is a strong sign for euro altogether. And you could expect the euro to really gain some power along with it, and some more thrust up with that eventuality. But on the other hand, if the Social Democrats make a majority and come into power, Democrats have been very vocal about how the bailouts must be restricted, and with the German economy also being the only strong economy in the or the strongest economy in the union itself, the Social Democrats have been talking about how restrained they must be towards bailing out the other weaker countries in the EU. Now that would be a strong sign, or that would be a strong blow to countries like Portugal and Spain, especially, which have been which have been pushed into some kind of a recession right now, and they are facing a lot of economic pressures. So that would push the euro down, and that would be extremely bearish for the euro currently. So the current news that I have is there has been a split vote when in the German elections, and it stands that the CDU is the single leader with 42%, but they still do not have the majority of 50% and above to really form the government. So currently there would be a lot of political turmoil, and there would be a lot of uncertainty in the market. So I would advise on a strict restraint when it comes to trading the markets right now. And unless there is a clear verdict on this issue, I would recommend to stay flat on the market and wait for some developments to happen before really entering the market. But while we wait for some reports on that, or some verdict on that, let's just see what are the technical scenarios with the market right now. So here the market is above the weekly pivot point. The weekly pivot point is at 133.60, and the closest supports and the resistance are the weekly pivot support one, which is at 132.27, and which is also pretty close to the three drive target that we had spoken about in our previous research. And on the upper side, we have the first weekly pivot resistance one at 135.60 area. Now, I had told you that the market has reached the overbought condition, and we should not really look at the long positions immediately. But with the Friday's small down move, and a smaller range compared to the previous day, what the market has automatically done is it has created a little bit of room over here, so that for it to move up if there is a thrust up to come. So now we are again open to the possibility that the market might still push ahead a little further up. So to support this theory, what also I also have here is a harmonic pattern. It's a ABCD pattern, and you can see that the target for the ABCD is coinciding exactly with the weekly pivot resistance one. And um, and interestingly, if you go back to the monthly chart that we did earlier, the target for the bullish wedge is also around 135 70 area. Yes, I'm sorry. Yeah, just a moment. Let's just confirm. Yes, it's around 135.70 area. So now we have multiple reasons why the market could really push forward to this target if before it wants to turn back, if at all it wants to. And another reason why the market could really move to this target is whenever there is a strong move of this range, the market does not just turn back and fall immediately. There would be some, maybe even small moves up before it can start the downward move, or retracement, even if not a reversal. So it is a possibility that can happen. And again, the stochastic is showing a buy, and the MACD is bullish. So currently we are trading for the harmonic pattern on the daily time frame, and also looking for some retracement to begin with at the end of it. But with the election results coming in Germany in the meantime, what can we expect if the CDU comes back to power, and if there's a strong upward move in the with the euro? Then we could probably look at the 127 extension on the daily time frame. That's around 137.71, which is still within the resistance area in the monthly time frame. So it is possible. It is not an impossible target for the market as such. So watch out and be careful, and before you really enter the market in this scenario, in this situation. And I would advise again that maybe we should wait for some kind of confirmation from Germany as to what as to the political situation that's turned up there. So looking at the hourly time frame, the market has again shown some consolidation over here. It's a smaller rectangle pattern compared to this, but I just want to show you something else over here. What the market does after a move up like this and a consolidation, there has been some kind of a pattern in the market when it comes to this kind of an action. I just want to see, yeah, you can see that there has been an upward move, some consolidation over here, and a small upward move before retracement. Upward move, consolidation, consolidation, upward move. So yeah, you could see that in a lot of places. Upward move, consolidation, some more thrust up, and yeah, so upward, consolidation, upward. So the market has followed this pattern for quite some time now, and I think it is still possible that it might again do the same, just because we have one more target now to the upside. But it need not happen again with the other risk involved with the market right now. It's not a necessity, or it may not happen. So be very cautious. And on the hourly time frame, I have nothing but to say that the duopoly directional pattern of the double repo sell has failed, because you can see that there has been a close below the 3 by 3, there has been a close above the 3 by 3, and then a close below the 3 by 3, but the continuation downwards has not happened, which stands to say that the duopoly directional pattern of the double repo sell has failed. And whenever there's a failure, you can expect some upward move. um, yes, so you can expect some more upward move since there has been a failure. So watch out for that as well, and I think the market has created some room to go up before a retracement or a reversal can start. So be cautious again, watch out and keep your ears open to the fundamental situation right now, and be very cautious. But with some confirmation from coming in from Germany, I would predict some really strong moves to happen in either direction, whichever way it goes, and that we should be prepared for. And I think we could really cash in on some quick pips in that front. So all the best, and I wish you all a great trading week ahead. And thank you. Bye bye.